Hey guys, how's it going? And thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't. Don't forget to subscribe, so let's get started. So in this video guys, we're going over how to deal with the stock market crash, and is there even going to be a stock market crash? Now I'm doing this video for a couple of reasons. I know there's a lot of talk out there talking about is there going to be a stock market crash in the near future at some point? You know, we've been in a bull market for a very long time. I had another video talking about a stock market crash, some actual factors that might cause some issues in the future. If you're interested, link below. But for this one, I want to go over some past stock market crashes, what happened during that, like the average of the crashes, bear versus bull markets. I want to help you guys of how you should handle a crash, and then I want to give you my plan of attack of how to beat up the next stock market crash. So let's look at what's going on right now. We can see in this chart in the past 5 years that it has been kind of flat in, few years, but recently has been picking up very nicely. And there is no doubt about it, in 2017, this is a 1-year chart by the way, 2017 was an incredible year. The average return in the stock market was around 20%. Some of the big players, you could have easily doubled that return. But recently you could see the huge volatility, slight downturn. There is a correction going on. So could this be the start, or could this just be some current fear that is going to blow over in a couple months? So 2017 was incredible. 2018 is kind of the exact opposite, a lot of volatility. But what's going on now is, there's a lot of talks about tariffs going on, like a trade war between different countries and us. There's also the interest rates increasing. Could that affect the stock market? And another huge one, Trump keeps opening his mouth. Now, I'm not getting into this debate whether you agree with him or simply not, but there's proof that every time he talks about something, there is huge volatility in the market. So that's what's going on now. So let's go back in time to see what I'm going to be looking at the Dow Jones, by the way, of what the Dow Jones has done in its history. So this is a chart of the Dow Jones from, you can see up top, 1896 to 2016. Not really very currently up until 2018, but you'll get the basic understanding of everything. You could see the recessions over time, the recovery time. Huge amount of information. There's another chart that simplifies it. So bam, less information, but still the main basic things going on. So you could see earlier in the chart the crash of 1929. That was the depression. Bad things were going on there. And then there was a huge bull market, then kind of steadied off, kind of flatlined, and then continued to go up. Black Monday was 1987. That was another stock market crash. We have another chart in a few minutes. I'll show you kind of more specifics. But then in 2000, the dot-com crash. And of course, the most recent crash, the Great Recession in 2008-2009. So currently, guys, we are in a bull market since that 2008-2009 era. It's been around 9 years since we've been fairly constant growth. Now I want to compare where we are now to back then, because you could, I don't want to say predict, but you could kind of get an understanding of how crashes might work. So this next chart actually shows you the average bull and bear markets. So we can see it's kind of broken down to all of the bull markets of the growth, and then you can see all of the bear markets of the dips. Now you could look through them in the meantime. I'm just going to give a basic overview. The average bull market was around 9 years, which is where we are right now, and the average return in that bull market was 474%. Right now, I mean, this is yeah, actually this is up to 2018. But we are currently in the 300%, and the average is in the 400%. Now that doesn't necessarily mean anything, but something to think about. Now the average bear market is 1.4 years, and the average decline is down 41%. Now something very interesting to note, guys, there are actually a lot of bull markets that went for 12 plus years. So if we go on for like another couple years, that's not like unheard of. It's definitely possible. So since the average is 9 and we're in 9 right now, that doesn't mean that we're going to crash in 2018. Another thing to remember is that a bear market isn't like a long drawn out, like, oh my God, 20 years of just negative returns. No, they're around average 1.4 years. Now, yeah, it does take time to recover back to where it was. But if you are in a position where you have like, let's say 10 plus years to retire, like 10, 20, 30, 40 years, that recovery time really isn't a huge factor. So those were the basic averages of bull and bear markets, just to get you guys up to speed of what has happened in the history. So now I want to go into some strategies, but before going into some strategies, I would just say don't follow or trust the news, because people continuously say, oh my God, the market's going to crash, bad times, bad things are happening, and we keep increasing. There is growth in the economy. And I was actually recently listening to an audiobook. I usually listen to audiobooks on my way to work just to keep my mind active, but it was about the next stock market crash. Now this audiobook was written in like 2011, and the guy was predicting a stock market crash between 2012 and 2014. Now obviously he was wrong, which is why I would suggest not to listen to the news. If you listen to this guy, now I would recommend, like, I would tell you guys the title and the author, but I was just so frustrated of what he was saying, and he was obviously wrong because we didn't crash in those years. It's actually 4 years after the latest that he was thinking, and we just continued growing. So if you listen to these analysts, these news reporters, and people out there just trying to bring fear onto the world, then you're going to miss out on these gains. So the first strategy is to panic, hide, and run into Mexico before Trump could put out that wall. That's a joke. Don't do that. The first strategy that I would suggest is a passive strategy, especially if you have time until retirement, like 10, 20, 30, 40 years. So a passive way of investing in the stock market is forget about it. Nothing. You do absolutely nothing. You cruise and ride it out, because it will, yes, it could crash, but guess what? It's going to rebound just like every other time. So over time, you will be fine and would have lost no money if you stayed in it. Additional ideas for this passive investing strategy would be to get dividend stocks or dividend companies. So even if stocks are declining, or even if they're staying flat, you are still getting dividends. Now the second strategy would be the opposite of passive. I'm just going to call it aggressive investment strategy. So instead of kind of just riding along with it, you could go against everything you are mentally prepared for, going against everyone out there, and actually buying on the way down. You will look insane. It's going against every type of reasoning in your body. But if you look at past history, yes, there is a decline, but there is a recover, and even more so right after that decline. So you're actually buying at cheaper prices, basically on sale. So guess what? When it rebounds, you're making even more money. So what goes down? You buy some. It goes down even more. Then you buy some even more. And then it just continues going down. I would suggest continue buying more. Completely mental, but makes sense. And the third strategy is to continuously do your research and get education about the stock market. Now, if you think that you easily get scared, you can't sleep, well, you could do one of two things. You could simply get out. You just sell out, you put it in a savings account where it's completely safe. You miss out on the possible gains, but you also miss out on the possible drops as well. Now, you could also still have a little bit in stocks, but just realize, guys, stocks, they're just not numbers on a screen. They're not going to go down to zero. Now, it is possible companies could go bankrupt, and I'm talking about big companies here, like Apple. They're not going bankrupt anytime soon. So a stock isn't going to go to zero tomorrow because it's an actual company. They have earnings, they have income, and if stocks go down, then stocks are on sale. It's like shoes. Would you rather get the pair of shoes that you like for $120 or $80? So those are kind of the main strategies that you could go toward. A strategy extra one that I would definitely not suggest is selling everything that you have, because what you would be basically doing is, if you have stocks now, you bought high, it drops, so you sell low, which is the exact opposite of what you should be doing. You should buy low and sell high. Now, for me personally, my game plan of tackling the stock market coming up is I am more of an aggressive investor. As stocks go down, I kind of buy in more. Recently, I am cautious on buying more dividend stocks. So if they continue to go down or remain flat, I still get those dividends. And for my main big holdings, I will not sell any stock, especially if it goes down, because you'll be selling when you would lose that money. So I'm just going to hold for the long term. I'm not scared of a possible crash. I would actually kind of enjoy it because you get stocks on sale. Now, is it going to happen? Now, some people are saying there might be like a 70% chance that the next stock market crash can happen before the next election, before like 2020. So people might not be expecting it in 2018, but possible higher chance of 2019, 2020. Now, real quick, I want to go back to a chart to actually show you. I recently learned from a hedge fund manager, Ken Fisher. Great guy, has great ideology, just great thoughts. I would suggest looking him up. But he taught me about like the cycle of a bear and bull market. So I want to show you this chart. So you could see the crash of 1929, it crashed, right? So it increased, then it was flat, then it increased again. So just remember, increase, flat, increase. Well, look at the Great Recession beginning in 2008, 2009. There was a crash, then there was an increase. Then, I think it was around 2010, 2011, it was slightly flat, you could see toward the end of the chart. And now it's starting to increase. So what Ken Fisher was talking about is there are three phases in a bull market. In the beginning, there is huge growth. In the middle, there is flat line. And then at the end is more growth. So I think right now is actually just the beginning of the ending phase, which is what he was talking about. So this could easily go on for another couple years. Not saying it has to, but it can. So my best advice is keep investing for the long term, guys. I'm sure we'll be fine. Don't get upset with all the fear going on. Most of it will probably blow over. There's always something bad out there, right? So if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, so you could finally control your money so it doesn't control you. So thank you so much for watching, guys, and I'll see you in the next one.